Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. What a wild Monday it has been for not just the cryptocurrency markets, but the financial markets as a whole. We have seen a pullback across the board. We're going to spend the first part of this video talking about what exactly caused this pullback for the crypto space and the financial markets. And then we are going to jump into Cardano. We're going to be going over some sort of telltale signs of why potentially there was TA to support a sell-off to the downside and what's to come moving forward. You guys know that we were anticipating more continuation in this bull run. I still am anticipating this. I did expect, you guys will know, I was expecting a breakout this week for Cardano. We have got a breakout, but to the downside, whereas we were expecting one to the upside. And I am definitely guilty of focusing on the kind of macro time frames, looking at something like Cardano. You guys will know I'm exceptionally bullish and ultimately didn't really predict something like this taking place today. But we're going to go into what really caused this, and then we're going to get into some more detail in regards to Cardano and why there was some precursors for this. So the cryptocurrency space has sold off as a whole by around about 8%. The total money in crypto, which is the chart we're looking at the moment, the daily candle, I think, is down around about 13%. We are seeing a bit of a buyback into this, but ultimately the crypto market sold off due to a company in China, a very large company, a big property development company in China, essentially failing on their debt. So there's a company called Evergrande in China that is a property development company, and they are very, very heavily leveraged. They're a huge company. The government of China have essentially came out and said they aren't going to help them. We did about 6 hours ago post something on our Twitter. It was a retweet from the Crypto Sniper, and it was talking about Evergrande and how some of the 10 largest German stocks had sold off as a result of this news. You've got Porsche down by 5%, Volkswagen 4.3%, Deutsche Bank 5% plus, and Airbus all sold off today. Based on this news. And essentially what they're talking about is a liquidity crisis in China as people are trying to pull their money out of this company and salvage whatever value that they've got by essentially liquidating their positions in anticipation for more downside that has caused a real sell-off across the board. And that's really, it's a very humble reminder that the cryptocurrency space is still largely tethered to the kind of financial realm, and that's essentially what we're seeing take place today, guys. This is an article here. Wall Street joins global sell-off as Evergrande crisis intensifies. This is another article here from Cointelegraph. Bitcoin loses 44k support as stocks Evergrande nerves hit BTC price. So really, like I say, this isn't a reflection on the cryptocurrency space. This is a reflection of the kind of macroeconomic sphere having a direct impact on crypto. And we need to remember that we need to keep our eye on, much the same in March 2020, the kind of world events took a real toll on crypto, regardless of the underlying fundamentals never being so strong. And the underlying fundamentals, guys, absolutely are super strong. We are very guilty of kind of looking at crypto as a whole and the direction that it's going in and being exceptionally bullish and giving a bullish bias to everything based on that. But the short term, there was some real telltale signs for Cardano that a sell-off may be coming. You did have a pretty beautiful head and shoulders play out here, guys, and ultimately we are going to give you the target for that, and we are going to kind of speculate on what we think's to come. The main takeaway from this video, guys, is HODL, and really, I'm still very confident with where crypto is going. I'm still holding all of my crypto. I haven't sold any of my HODL part. I'm not in any trades currently at the moment. Last night I got woken up to a number of notifications. Stop losses were hit across the board. And this was really, like I say, just due to this company over in China going through a bit of turmoil. And it's kind of being deemed the Lehman Brothers, the Chinese equivalent of the Lehman Brothers. It is very significant, of course, for China and the people of China. But it, of course, because of how leveraged we are as a world, business is largely leveraged on debt. This has a knock-on effect on a number of different areas, and this is what we're seeing, that kind of constricting, that liquidity crisis, people trying to pull money out, and this really affecting the financial markets as a whole. So in regards to Cardano, guys, there was some telltale signs. And like I say, I am very guilty of focusing on the macro because I'm so bullish. I understand, we have the Alonso hard fork, and I know what this is going to mean for the Cardano network and the kind of growth that we're going to see off the back end of it. Here, you did have a descending triangle. This is where you have descending resistance and you have a kind of horizontal support. This kind of pushes you lower, and these typically do break to the downside. We have indeed seen that, but more of a prominent textbook pattern that played out here, guys. And the reason I'm bringing this up is for things, those of you who are new to markets, new to charting, and you want to kind of know what to look out for and what not to look out for when kind of determining the direction of the price. You can see you had a very textbook head and shoulders here. This was your left shoulder, your head, and this was your right shoulder. And if you focus on your right shoulder here, guys, it's really very apparent that this was going to play out because your right shoulder is significantly weaker than your left shoulder. This is a precursor that there is weakness in the market and a sell-off to the downside is potentially coming, and you are going to see a head and shoulders take place. Can you see your right shoulder is significantly weaker than your left? In fact, on this one here, you have a big kind of hammering wick to the downside, and ultimately this has come to fruition. We are going to take a look at Bitcoin because Bitcoin potentially could be setting up another head and shoulders here. Right now, I'm not jumping back into any positions. My HODL part, the cryptocurrencies that I accumulate as regularly and as often as I possibly can, I'm going to continue to HODL. I'm actually going to take advantage of this dip, even if we do go lower, because ultimately I know where this space is going as a whole. We've continuously emphasize that to you on this channel, that crypto is the future and we are going to see upside. What you are going to have within that journey is turmoil, ups and downs, and in actual fact we will zoom out for Cardano and show you that this is somewhat normal. When you have a impulsive move to the upside in the space of about a month, Cardano went up by about 200%. A pullback from that is very normal, and you are still seeing that. We do still believe wholeheartedly that this Elliott wave structure that I believe we're in is going to continue, and we are on that fifth and potentially final wave of this bull run. But back to the kind of short-term time frame, which we've been guilty of neglecting somewhat, you can really see that this was indeed a head and shoulders. You do have targets for your head and shoulders. What you do is you draw the neckline, which is here or round about here, and it will give you, you essentially then take a trend line from the neckline of where the kind of head and shoulders forms. You draw up to the top of your head, and then what you do is when you break the neckline, you'll draw it to the downside, and this will give you a target. And we did get very, very close to it. This is in fact, we pretty much hit it spot on, guys. We did update you with this on Twitter. Can you see this? This is your target to the downside, and this is where you kind of fell. On top of this, this actually does line up with a kind of swing low. Remember, we target swing highs and swing lows for areas of resistance in a downtrend that we may use as support. So this is significant. The reason I'm not running in at the moment is it is a very common trait after a sell-off like this. Certainly in the given the conditions of this sell-off and how it's more of a macroeconomic sell-off and not a crypto related sell-off, something horrific hasn't happened with the cryptocurrency space. This is 100% to do with what's currently taking place in China and people trying to pull liquidity, pull value from their assets in anticipation of more damage to come. I am treating this as a buying opportunity, as I do on every dip. If you guys aren't already following me on Twitter, head over to @RealAllInCrypto. We did post this. El Salvador president, they can never beat you if you buy the dip. That was one of his recent comments. And buying the dip has worked very, very well in terms of a strategy for crypto, as it is on this kind of macro adoption journey, if you will. So this is really what we're looking at. And of course, the reason I'm bringing this up, this is somewhat of an autopsy report. Things to look out for into the future. We are very guilty, and I'm only a human being, guys. We don't get everything right. You guys will know that we did anticipate a breakout to the upside due to what's coming. We got the Cardano summit. We just had Alonso hard fork. We're going to start to see DApps roll out. I've never been so bullish, and I get slapped in the face with a pullback. And hey, we're happy to be wrong, guys. One thing that I am is honest. And that's all you're going to get from me on this channel. If we're wrong, we'll hold our hands up and say, okay, things didn't quite play out like this. But ultimately, I am anticipating a recovery from this, just like we said you're going to get a recovery from this. And we've essentially said, since we've had the channel, every single dip that we've had, we've broken it down, we've put it into retrospect, we've put it into given some kind of a context to it and said, look, this is just a pullback and we're going to see continuation. We've been right so far, ladies and gentlemen. If there's one thing we are right on, it's the macro trend of this market. So this is where you are today. We're not running in just yet. Until you break some of these highs, until you come back to this neckline and kind of retake it, and test it as support before we see continuation, we're not really going to be diving into any positions. We are going to be accumulating spot crypto, but ultimately we're going to wait to see how this kind of Evergrande situation unfolds, because it's a real learning lesson, or reminder, I should probably say, which is more accurate, that we aren't immune to the macroeconomic scale. We are a part of that, essentially. Crypto is becoming more and more accepted as a financial asset, or a financial instrument, if you will, and is going to react to the kind of macro, what's happening on a macro level. So this is really all that the sell-off was to do with. Nothing to do with crypto. Fundamentals have never been so strong. If you're not already following me at Twitter, guys, head over to @RealAllInCrypto. This was another tweet from the Bitcoin archive. Despite the 11% Bitcoin selling off 11%, exchange supply remains flat and still on a trend to continue falling. So the amount of illiquid Bitcoin being taken off exchanges so that it can't be traded and used to kind of move the price in one way or another. The amount of hodlers is growing. Meanwhile, the price is going down. So it's very contradictory and really shows you that fundamentals in many cases don't matter. The price is determined by a very small amount of the liquid supply and exchanges getting moved, traded, and is actually quite an inaccurate representation of price. So that's really where we are. It was a very textbook head and shoulders. We are guilty of kind of neglecting, like I say, the short-term timeframes. There were some people calling for this. Nobody really called for it based on Evergrande. Many people were just calling for an ABC correction. People like CoinsKid were kind of saying you're going to have this ABC. I would like to think that we have carried this out. You've got this kind of potential double bottom here. Can you see this? And ultimately, I am absolutely anticipating continuation. The main message, guys, is HODL. Stay strong. This had nothing to do with the cryptocurrency space, nothing to do with Cardano. This had everything to do with a company in China essentially failing and it having a leveraged effect on a multiple of other companies, and of course the people within China that will now be trying to gain liquidity from assets that they have in anticipation of mitigating damage. So that's really all I have for you in this video. I thought this was a very important video to make. It's a huge reminder to me that that crypto is still so tethered to the macroeconomic scale of things. It's kind of sad in a way, but it's just how life goes. I mean, in March 2020, when we saw everything crash, everything literally crashed, regardless of whether it was going to get affected by what we saw or not. And one thing that I want to point out with March 2020, which is just here, guys, is that this was potentially one of the biggest buying opportunities that this decade had to offer. And is this a similar thing? Potentially. We're yet to see how low it goes. There's always a kind of aftershock with sell-offs like this, where you kind of see, people cotton onto it and they go, oh no, we're going lower, and you see this kind of retail trickle out. But ultimately, I am anticipating continuation. Potentially, we come up, take this neckline or we break it as resistance, take it as support, and then see further upside to come. I've never been so bullish on Cardano in my life, guys. In order or in context of it going up in price, and what's happened today isn't a reflection of the underlying product at all. So the main takeaway is HODL. I believe everything is going to be absolutely fine. I am going to watch this situation. In actual fact, I may even make a longer video going into more detail about just why this affected the crypto space. With it, in regards to Bitcoin, one thing that is important to kind of work out and pay attention to, if we switch it back, in fact, you can probably even see it more accurately on the daily time frame. You do kind of have a bit of a head and shoulder setting up for Bitcoin, and this, if this did play out, would see a target to, I think, around about 36, 37k. Potentially, I mean, this kind of right shoulder, is a little bit more strong than the right. Doesn't really mean too much. You are holding this current neckline as support. If you do fail that, I would definitely target this swing high. You can see this swing high has actually acted as resistance on a number of occasions that hopefully we are now seeing. In fact, we are seeing it now act as support. If we break that, then target some of these swing lows. and so on and so forth. But there is a target to this of around about 36, 37k. I don't actually happen to think that that's going to take place. I would like to see this as a kind of triple bottom. But ultimately, guys, you know, we're still very early in this sell-off. And by early, what I mean is I don't mean that we're early in it's going to continue. I mean we're early in to see what direction we take. After something like this, you want to let the kind of dust settle. You don't want to jump into a shark-infested water, you know, when you can't see what's below you, essentially. And that's what we're kind of trying to do. We're trying to let the water settle. You don't want to jump into a shark-infested water full stop. That was a bit of a bad analogy, but I'm sure you get what I'm trying to say. So we were wrong. We did indeed believe that we were going to break to the upside. We didn't really foresee. I even pinned this on my channel yesterday. But hey, I'm happy to be wrong, guys. As long as I'm right more times than I'm wrong, that's good enough for me. And ultimately, we're honest. If we do get something wrong, we will say that we got it wrong. We did anticipate, you know, Bitcoin essentially we thought was recovering as it had broken out of this falling wedge structure. Ethereum had kind of followed, but ultimately, due to what's kind of took place on the macroeconomic stage, everything sold off, and you are now back into this kind of falling wedge. And you did actually do this over here, guys. You know, if you guys remember, the falling wedge, get rid of that for the time being, was like this. You know, you saw this kind of breakout here, and then you just fell straight back into it. So you could still be seeing a similar thing take place. Ultimately, you know, I'm still very, very bullish on Cardano. I still absolutely am anticipating more upside and this Elliott wave theory structure to take place. How will we know? And for example, these arrows very quickly show the kind of hard forks that take place. This was the Byron, I think. This was Shelley, and this, of course, is Alonzo. And after every hard fork release, you do get a sell-off. We have now got that. And ultimately, you know, really what you've done is your 1, 2, and you're setting up for your 3-wave. 3-wave's largely going to be driven and amplified by the amount of dApps and applications being built on top of Cardano, and how much of the overall supply that isn't staked is now going to be getting eaten up in actually using these applications. So I am still very, very bullish on the macro. Short term, we're going to have to let the dust settle for a couple of days. I'm not worried. My HODL pot, I haven't sold a single Cardano. I haven't sold a single Bitcoin. Not that I have many Bitcoin. I haven't sold any Ethereum. I haven't sold anything. I'm going to HODL through this in anticipation for more upside to come. So that's really where we are, ladies and gentlemen. I don't think you've got anything to worry about. I think, yes, of course, there were definitely some telltale signs. We should have really paid a little bit more attention, or certainly I should have, to the kind of smaller term time frame. But ultimately, I thought this was going to act as a very, very good support level. And I didn't expect this kind of macroeconomic event to take place. It's taken place. It's what you do after the event that counts. And like we kind of went over, you know, March 2020 was an amazing buying opportunity. I believe this potentially could be as well. And you could have now completed your A, B, C correction, ready to embark on that 3rd wave within our 5th wave. So that's really where we are, guys. Ultimately, I'm not worried. If you're not already following me on Twitter, head over to @RealAllInCrypto for some more timely updates. We post quite a lot of stuff on there now to kind of give you guys, you know, we posted a tweet earlier talking about how there was indeed short-term, we were short-term somewhat bearish, but ultimately the long-term was looking still absolutely bullish. And for the majority of you out there that are in this market, you shouldn't be trading it. You should be hodling. And if there's one thing the cryptocurrency markets have taught us, it's that hodlers win. That's all I really have for you in this video, ladies and gentlemen. I'm going to love and leave you on that note. I felt like it was very important for me to get on here and kind of explain what's happened and potentially where I believe we're going into the future. We're still very much, and to really put this into some sort of normalcy, after every move to the upside, you get a pullback. That is a fact, ladies and gentlemen, and is still a fact today and is going to continue to be so. Ultimately, you are going to see continuation. You are going to break this previous all-time high and go on to make new ones. Somebody asked me if I believe we're going to get to $5 this year. I absolutely still do believe that. We typically do sell off in September from a kind of looking at cycles. And there's nothing really out of the ordinary that I'm particularly worried about. That's all I have for you in this video, guys. Remember, HODL, and I'll see you all in the next one. If you enjoyed the content, like is always appreciated. So is a comment, and I'll catch you in the next one, guys. Thanks for watching.